Good morning, everybody, and welcome back to our discussion series on this question paper. Let me take up the second question. Second question is which of the following explains? Actually, this is also from the mock exam paper for ACCA Financial Accounting BPP publication. On that mock exam paper 1, question number 2. Which of the following explains the impressed system of operating petty cash? Now, to try to understand that, now the meaning of impressed system will be when, let's say, you set up a float in a business for usage of petty cash. When you are setting up a float, like the float amount is let's say 1000, and then during a given period, during a week, if you spend 700, when you spend 700, and then what you do is you find the difference, that is 300, the available balance is 300. So when the available balance is 300, and if this is the time for reimbursement, now we are following impressed system, the reimbursement amount will be exactly equal to the amount we spent, that is 700, this amount. And also after reimbursement, the total balance or the final balance available should be the original float, that is 1000. See, this should be 1000. So this is what the interpretation or the meaning of impressed system with regard to petty cash. So when you read this question here, which of the following explains the impressed system of operating petty cash? There are a few answers. Weekly expenditure cannot exceed a set amount. No, that is not the answer. The exact amount of expenditure is reimbursed at intervals to maintain a fixed float. All expenditure out of petty cash must be properly authorized. Regular equal amounts of cash are transferred. Now, the answer here is option number 2. Exact amount of expenditure is reimbursed at intervals to maintain a fixed float. So if you do that, this will meet the condition that we discussed here. See, the exact amount of petty cash reimbursed, which equal to the expenditure that we incurred. So answer is option number 2. For the question number 2, answer is option number 2. And then question number 3, which of the following statements are true of limited liability companies? When you talk about limited liability, there are certain features or characteristics that we need to understand. The company's exposure to debt and liability is limited. So as what I try to mean is that the liability of the shareholder is limited is to the extent of unpaid amount of shares. So a financial statement must be produced. Obviously, a company continues to exist regardless of the identity of its owners. So here the answer that I suggest, the first one is not related to the debts. Actually, it is related to the unpaid amount of shares, not about their liabilities. I mean, not about their debts. So the liability, when you refer, it's only to the extent of unpaid amount of shares. So our option number 1 is wrong. 2 is correct. Financial statement must be produced. So when one is wrong, answer option 1 and 2 is out, and also third one is out. So answer is option number 3. Thank you so much, and I will continue discuss the similar. I will continue this paper, and I will keep sharing the videos accordingly. Thank you so much. Have a nice weekend.